Alright everyone, welcome back to the channel. I hope you're all doing well today. In this video, we're going to slow things down, take a step back, and really break down what's happening with Zbeck from a broader market perspective. This is not going to be hype, this is not going to be guesswork. This is simply a calm, structured look at price behavior, market psychology, and where things currently stand. There's no urgency here, no panic, no rush, just logic, structure, and patience. Also, a quick reminder before we begin. This video is not financial advice. Everything discussed here is for educational and informational purposes only. Always do your own research and make your own decisions. Now, let's get into it. When we zoom out and look at the weekly close for Zbeck, the first thing that stands out is this. It was actually a healthy and constructive close. Now, this wasn't some explosive candle where price doubled overnight. It wasn't a massive vertical move, but that's not what matters here. What matters is structure. Compared to the last several weeks, this weekly candle showed noticeably more strength. It was larger than the two prior candles, and when we look back historically, the only weekly candle that clearly outperformed it was the one we saw toward the end of September. That alone tells us something important. Momentum is slowly rebuilding, not disappearing. This type of candle is what markets often form before bigger decisions are made. It's quiet strength, not loud hype. One of the most important technical developments here is that Zbeck has now officially printed a higher high on the weekly time frame. Previously, price stalled at a certain weekly swing high. That level acted as resistance for a while, but now price has pushed above it and closed above it. That's not random. That's not noise. That's a structural shift. Higher highs are one of the core ingredients of an uptrend. Without them, markets stagnate. With them, markets gain direction. So even though the move wasn't dramatic, it was meaningful. Right now, we also have a clearly defined weekly swing low. From a technical standpoint, this gives the market a reference point. It tells us where buyers previously stepped in and defended price. Ideally, from here, the healthiest scenario would be one of two things. Price consolidates near this zone and closes nearby on the weekly overs. Or price dips slightly, tests the area, and then stabilizes. What we don't want to see is a full bearish engulfing move. For anyone newer to price action, engulfing can sound confusing, so let's explain it simply. A bullish candle represents progress upward. If the following candle completely reverses that progress, opening higher and closing much lower, it essentially erases all of the previous gains. That's what traders refer to as an engulfing candle. We've seen this happen before. Price moves up one week, then the next week completely wipes it out. When that repeats multiple times, the market enters a range and loses momentum. That's the scenario we want to avoid here. There's a specific area that matters a lot right now. While price could theoretically revisit the 0.0028 level and still technically remain in a higher low structure, that's not the ideal outcome. On the daily time frame, the more important zone is around 0.0285. As long as daily closes remain above this region, the broader bullish structure stays intact. We can dip, we can retrace, we can shake out weak hands, but staying above that zone allows price to continue forming higher lows, which is the foundation of any sustainable upward trend. Looking at the weekend as a whole, it was fairly neutral. Saturday didn't bring any surprises. Sunday showed a bit more rejection, with sellers stepping in and pushing price back. But here's the key point. This kind of behavior is normal. Markets don't move in straight lines. Pullbacks are not failures, they're resets. And compared to truly bearish scenarios, this pullback is relatively controlled. Now let's talk about the bigger picture. Bitcoin. Over the last few days, Bitcoin has also experienced selling pressure. And yes, ideally, it would have been nice to see Bitcoin close its weekly candle a bit higher, maybe $1,000 or $2,000 higher, to create stronger confidence. Right now, Bitcoin's price action isn't screaming aggression, but here's what is important. The structure is still intact. Bitcoin continues to form. A low followed by higher lows and higher highs. That means the overall trend is still pointing upward. That said, it's always wise to acknowledge reality. Markets don't move purely on logic. They move on liquidity and psychology. Market makers often push price lower than expected to trigger fear, stop losses, and emotional selling right before the real reversal begins. That's why sudden dips don't automatically mean weakness. Sometimes they mean preparation. From a technical perspective, Bitcoin could spend time consolidating around the 91K to 92K range and still remain completely healthy. Nothing would break, nothing would collapse. The higher time frame trend would remain untouched. This is why there's no reason for panic, not on Bitcoin and not on altcoins. When we factor in the CME gap, the story becomes even clearer. There was a small gap recently, and it has already been filled. Historically, when these gaps fill, price often dips slightly and then reverses upward. We've seen this pattern play out many times before. That's why expectations for a stronger move soon are not unreasonable. Bringing the focus back to Zbeck, the overall picture remains constructive. The key short-term area of interest is 0.0286 on the 4-hour time frame. This level has been broken, which opens the door for further downside in the short term. That doesn't mean collapse, it means retracement. It would not be surprising to see additional selling pressure followed by a small relief bounce early in the week, then another test of resistance around 0.033. If structure does not reclaim that zone, further downside could occur before a proper reversal takes place. This is simply how markets breathe. It's important to repeat this. Pullbacks are not bearish by default. After a pump, markets often need to cool off. That cooling phase builds the foundation for the next move. Without it, rallies become unstable. Looking ahead, expectations for January remain fairly optimistic. A weak January would be surprising given the current structure. If price were to completely flip and invalidate recent progress, that would be unexpected. But until that happens, the trend remains intact. The idea of lows being swept is still on the table. This happens frequently in crypto. Price dips just enough to scare people out, then reverses. This isn't unique to Zbeck. It happens across the entire market. There's no panic here. Higher timeframe Bitcoin structure is still valid, which is why there's no reason to fear altcoins broadly. December's close was critical, and it held. That alone carries weight moving forward. From a ranking standpoint, Zbeck currently sits around 132nd among thousands of active cryptocurrencies. Performance metrics show strong monthly gains, positive weekly movement, and a short-term daily pullback. This is not abnormal behavior. Perhaps one of the most overlooked but important metrics is holder count. Zbeck now has over 92,000 holders, and that number continues to grow even during periods of selling. That suggests accumulation, not abandonment. Zbeck is not yet listed on major exchanges like Coinbase or Binance. But historically, projects that continue building and growing holders before major listings often benefit the most when those listings eventually arrive. Timing is uncertain, but direction matters. From an indicator standpoint, momentum remains constructive. Trend signals are still leaning bullish, even after the recent pullback. Long-term moving averages remain supportive, and price has not lost key structural zones. RSI behavior also aligns with this narrative. Daily RSI moving back toward neutral often creates opportunity rather than danger. Weekly RSI near neutral typically represents value zones, not overheated conditions. If you believe Zbeck has long-term potential, whether that's this year, next year, or further out, then price action over the last few months represents accumulation rather than exhaustion. These are the phases people often regret ignoring later. So to summarize, weekly structure remains healthy, higher highs have been confirmed, pullbacks are controlled, not chaotic, Bitcoin's macro trend is intact, Zbeck fundamentals and holder growth remain strong. There is no rush, there is no panic, only patience. If you found this breakdown helpful, take your time, do your own research, and stay disciplined. All content on this channel is for informational and educational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Thanks for watching Coin News. Don't forget to like, share, and subscribe for daily updates on crypto markets, price analysis, and breaking news. Hit the bell icon so you never miss an update from the world of digital currency.